Good morning, Fabio Ranetti for Winston Capital Advisors. Today we're going to cover the week of December 11 to December 15 from beautiful and chilly Vermont. This morning it's about 0 degrees outside. So today we're going to cover the Disney Fox acquisition. A little bit about some Chinese stocks. We have a central bank feast last week, also the tax reform that somehow put the markets on record. A little bit about Brexit. Very good numbers in Japan and Germany. We have good some inflation in the US, Bitcoin, and what elections we have this coming weekend. But let's go first with the very talked about Fox Disney acquisition. Disney is buying the content assets of Fox for about $70 billion, not the news business, which somehow Rupert Murdoch goes back to the original what he built was a news empire. Then he did content and movies. And Disney basically, it's a very good article on Barron's, is like everybody's trying to play catch up with Netflix. You know, Netflix has a streaming, got about 120 million, less than 100 million users that pay a subscription, and everybody's trying to get into that model. Kind of late, you know, Disney plans to do that. You know, they have good franchises like Marvel, Star Wars, and others, but somehow is losing to that. In the middle of this, you know, you have the TV companies, the cable companies. Remember, AT&T is buying Time Warner, Verizon is buying Yahoo. So everybody's trying to somehow, or has discovered lately, that if you don't have content, you're just passed through. The problem is that, you know, Disney allegedly will start their streaming in 2019, and by many estimates, by 2019, Netflix will have 155 million paid users. And people believe that as you play Netflix, you will have to pay, you know, for Disney, for ABC, for CBS, that for that you already have cable, you have a bundle. So in a way, they're all trying to apply some sort of strange catch-up on a big leader. Reminds me a little bit of people trying to play catch-up to Amazon back in the days, or to Google or Facebook. Very difficult that anybody will win that race. So, you know, we own Netflix in the portfolio. We like it a lot, and we'll stay where we are. Two comments. You know, two stocks that done very well is Alibaba and Tencent in China. We missed that. I haven't not looked at that. I was a little bit not super comfortable with government issues. You know, minority shareholders, not the government of China, but you know, issues, corporate government issues in China and all that. And we missed the rally, but after talking to some clients that, you know, have done some homework and are long, I will do it, promise, by January we'll have some idea on what to do there. Obviously, last week we have a central bank feast, as highly anticipated. The Federal Reserve raised rates. Was the last comment by Janet Yellen. No surprises there. The economy is doing well, full employment, but inflation nowhere to be found. More of that later. Also, we have some little spike in rates by the Chinese central bank. Norwegian central bank announced a possible raise rates next year. But the big thing for next year, you know, the big thing for last year or the year is about to finish was the tax reform in the United States and the succession of Janet Yellen or not on the Fed. We have that already out. President Trump has not had any other big promise so far in terms of, you know, on the agenda for 18. So in 18, the big thing will be interest rates. And the big thing on interest rates is less the Fed that everybody's kind of always trying to do, but it will be more what the European Central Bank will do. Will they change their policy? Will at some point they decide to start raising rates? Because remember one thing, if a year from now, the 10-year bond in the US is at 2% or something, and the 10-year bond in Germany is at 0.6%, we're going to have another year with the S&P in double digits and European stocks in double digits. Very important for us to think about that. So we'll follow that, and that I think will be the topic for next year. So we have that. Obviously, late on Friday, we have the tax reform finalized, approved. Looks like President Trump will sign it before year end. So again, this is a one-time shot, but clearly, especially will be very good for, you know, U.S. dollar, U.S. companies trying to repatriate money in 2018. That again, as many analysts have said, will go to buy back shares. On that, the markets hit a record, you know, ignoring some of the problems and very much in line as expected, we have very good numbers. Very quickly, Brexit, finally, they settled on the money issue. Like any good divorce, once you settle on the money, everything else gets easier. Now they're going into phase two, which is all the trade deals and trade agreements, and they also settle on immigration issues. So that's good news moving forward. We had very good numbers last week on Japan and Germany. Very good numbers of PMI, the Purchasing Managers Index, retail numbers, also in the United States, consumer confidence. So it's not just the US, we have a very good growth around the world in places like Japan, Germany, big engines of growth worldwide. And that goes into the earnings of many large companies, and as we say, and the market knows it. Also in the US, very good retail sales we had, and many indicators are talking of a record high Christmas sales season with very good numbers. We're still in the middle of the season, but that's what it looks to point out at a very big numbers. So on that, we think that again, more to come, but very good for the U.S. And listen, it's a sign of a growing economy, full employment, high levels of consumer confidence, high levels of investor confidence. So no surprise where we are. We can, again, the big issue is inflation, nowhere to be found. On Tuesday, we have PPI, or wholesale inflation, that tick up a little bit more than expected. That could have been a sign. But then on Wednesday, we have CPI, retail inflation, and that was down. So again, we are back where we start. No signs yet of inflation to come. All the week we talk about Bitcoin. It touched 19,000 yesterday, Saturday. We started trading futures on Monday. And again, a lot of conversation, massive amounts of trading on something that, it looks like a bubble. Who knows? Everybody that I know is somehow involved. We're not. If we don't understand something, we stay away, and that's the way we have been. And finally, we have elections this weekend. In Chile, we have Sebastián Piñera going for the second round. We thought that it was a good trade that we put last week, go long the ETF in Chile, ECH. We think he will win. He's a pro-business candidate, although he didn't do as good on the first round. We think on the second round he will win the election. And also the technical chart of the Chilean market was very good. And also, lastly, we have elections in Venezuela, municipal elections. However, the opposition decided not to participate, quoting or citing serious deficiencies in the process and fraud. And the President Maduro said, well, if you don't participate in the municipal elections, you will not be allowed to be present on the general elections for president next year. So he might run unopposed. So more and more, unfortunately, Venezuela is descending into an autarky system, which basically very little left of the democratic process. Not much for this week. In this coming week, there is not much news. As you know, this is the week of Christmas. Probably it's going to be a lot of celebrations, but there is little news to expect from. Like always, we'll be reporting and we'll be connecting next weekend on our weekly webcast. Have a good week.